Hello viewers, we'll be going over the S&P 500 ETF ticker symbol SPY. In this video, we'll be using the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for the S&P 500. So back to the technical analysis on Friday, the S&P 500 closed above 55 basis points on the 1-hour chart. We were at overbought RSI earlier on Thursday, and we have now fallen back onto the 18-day moving average, or I should say 18 moving average. As for the 4-hour chart, we have now approached to a positive MACD, and we see a slight divergence. And as for the daily chart, if we expand that further, right now we see also a convergence on daily MACD, and there's slight convergence on the 9 moving average and onto the 18-day moving average. And we have not quite reached overbought RSI yet. So if we do manage to move up higher, the next possible resistance will be the gap down between June 10th and June 11th at around a price of $318.80. And as for support, if we do manage to fall back lower, the next possible support will be the 18-day and 9-day moving average. And that is around a price of $308.15. And if we do manage to climb higher, that price movement to the upside is roughly around 2.2% to the upside, and to downside to hit the next support, that price movement to the downside is roughly around 1.2%. So now let's head to the day-by-day probability model. These models are now available in the link below, so do check it out. So as we progress to the 7th day, we have a 71% chance for the S&P 500 to climb between 0 to 3%. And to the downside, we have a 28% chance for the S&P 500 to fall between 0 to negative 3%. So now let's head to the day-by-day forecast for the S&P 500. So we have 1 day out, that will be a Monday, and 2 days out will be a Tuesday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, we want to compare the current trend on the line graph. We have our current trend, and overlapping it happens to be the best match. And right here we have our current trend, and below is the trend that we found on the line graph, and this trend dates back to April 7th to July 2nd, 2003. So let's begin comparing both trends. So what we have here on the current trend, we average above the middle Bollinger Band, dip to touch the middle band, and then once more average above the middle Bollinger Band, and towards the near end we did touch the bottom band and revert back to the mean to the middle Bollinger Band. So now in the trend in question, we have it average above the middle Bollinger Band, dip to the middle band, and then once again touch the upper middle Bollinger Band, and then revert and touch dipper or touch lower to the bottom band, and then revert back to the mean to the middle Bollinger Band. So what we have here is 1, 2, 3, 4, 5 points. And we also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined was back in April 7 to July 2nd, 2003. Back then, the S&P 500 was up around 93 basis points, slightly to the upside. And if we head back to the day-by-day probability model, that coincides with this standard deviation of 71% chance of it going higher between 0 to 3%. And let's examine closer on the technical performance. So on the current trend that we're in, we're only down 3.5% from monthly high, up 12.5% from monthly low, up 1% from 10 simple moving average, up 56 basis points from 20-day simple moving average, and up 4% from 50-day simple moving average. And now let's compare that to the trend that we just found. Back then it was down, say, 2% from monthly high, and up 13% from monthly low, up 1.1% from 10 simple moving average, up 37 basis points from 20-day simple moving average, and up 3.8% from 50-day simple moving average. So among the two trends, there are technical similarities. And again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.